Hope you guys had a great Tuesday. Let's go ahead and jump into this Wednesday pre-market brief. We're going to start off by looking at crypto. We see that it's pulling back just a bit on the day, and now we're going to take a look at how the averages ended the day yesterday. We had the S&P sitting at a negative 0.33%, so a bit of a pullback. The Nasdaq sitting at a negative 0.59%, and the Dow Jones heading positive at plus 0.10%. As far as our portfolio, we did pretty okay with Ferrari surging off of earnings beat of earnings per share and revenue, surging about plus 8.06% on the day, and a nuclear company, Vistra, hitting a plus 4.33%. So the portfolio did pretty solid. As far as pre-market hours, we are looking at a balanced push, heavy in the green in some areas, but a little bit of a pull in the red. We know how pre-market hours are. It flips and it flops. So we'll just wait and see what the day brings, but a lot more in the green. We'll see. Let's go ahead and take a look at the global markets, and then we'll do an S&P chart analysis and go from there. There is some economic data dropping today. I believe it's a jobs report and consumer retail sales. So that may play some role in how the markets move today. But as far as Asian markets, we see the Korean market ending their day at plus 1%. So they're still surging. This is why we invest in global ETF and global markets, my friends. The Japanese ending the day at plus 2.28%, still surging off of Takaichi's win in the election and the proposal of more spending to support the economy. And then Taiwan ending the day at plus 1.61%. European markets are sitting a bit in the red. The stock 600, which is generally the European countries as a conglomerate, sitting at negative 0.27. The CAC French market sitting at negative 0.42%, and the DAX German market sitting at negative 0.43%. So we might experience a little bit of a pull depending on the information released in that economic data. One thing I wanted to note before we go into that S&P chart analysis is the fact that news is one of the emotional disruptors when it comes to distracting people from key information and the facts of the market. To understand which way the market is going, all you need is chart analysis to understand support and resistance. Those are the two main things you have to understand to get an idea of where the market is going, and then looking into their earnings reports and the financial sector to get a gauge of why the market is going the way it's going and where the market may be heading in the future. I did want to point that out. Other things to note: today, we do have a couple of dividends from the portfolio hitting. Visa is hitting this week. That's a dividend check, another check in your pocket this month. I believe they release their checks or the dividend checks quarterly. It might be annually. IBM, Southern Copper, Eagle Point Credit is a company, ticker ECC. They release a monthly dividend check. So if you want to start increasing your general income that you can take out and not lose capital gains, Eagle Point Credit may be something to add. And then we have YieldMax, which is a weekly dividend paying stock that I have various of their stocks in my portfolio just to increase my weekly income. Who doesn't like an extra check in the mail? You have to be strategic with those because yield maxes are option ETFs, option dividend paying ETFs, which are very, very risky and very, very volatile. So be wise. So let me go ahead and look at the S&P and do a chart analysis on that before we go forward, and we will move on from there. Let's go to this S&P and let's take a look. We're gonna look at the daily time frame. We did have that stair step up from yesterday, which is nice to see. Hopefully we have the right type of information put out today as far as economic data, and then from there we continue to push, maybe gradually. It doesn't have to be fast, but let's go to the 4 hour. We have this pull down, which is somewhat expected, and hourly 30 minutes. Cool. So yesterday we basically bounced on this upper bound around 6,980. We have a ceiling at 6,986, which is the high that we reached yesterday. And right now, our lowest point is at about 6,937. So what we would like to see is either a bounce in this general area or a bounce off this lower bounds here around $6,905 and then a pushback to the upside. But we will see if we just enter into a sideways trend from here or we continue that push back up to new record highs in the S&P. But on the day right now, we're looking like we'll pull back at least at the beginning of the day, and then we may push back to the upside depending on how the economic data makes people feel in the market, and we will build from there. Yesterday, what did we cover? We covered Ferrari. I wanted to get a little bit in detail for you guys. I know I discussed their interior and how I hate it. But yesterday we got a lot of good news as far as their earnings. They beat dramatically as far as last year's earnings, and we got a big green candlestick now on the monthly time frame, which is solid. Hopefully we can see a trend reversal, because all we've seen is this major downtrend. Look at this channel. It's been going down. Hopefully this is not just another peak and we continue our push downward, and hopefully the F1 season undergirds Ferrari. But a few main points from their information that they dropped in their earnings call yesterday, which was an hour long. It was a lot, but great information. They do have business booked out to 2027. They will be debuting the Luce, which is the interior that they displayed, which I don't like. I don't know if you like it, but they will be debuting that May 25th this year. And that date is special to them because that was the day in 1947 that Ferrari actually won their first race, which is pretty cool. They do have 2 new stores launching in London and New York. And one big point as far as revenue that they wanted to highlight is the fact that their spare parts division saw an increase in demand, which signifies car use, which is great, the utility of their cars, but also customer increase of that use. So for your spare parts to begin increasing, that means the original customers are using your vehicle or your product, but also there's more customers needing to repair their vehicle or undergird their vehicle because they've been using it. So it's just a sign that Ferrari's business is still strong. One other thing that they noted for the investors is that during this F1 season, because of the new regulations, there may be unseen costs or unpredicted costs that's in their current model as far as their financial projections. But in general, the company's doing well. They're really ready for that Luce release, and yeah, everything is solid. We hopefully will see this chart begin to change. We see that near the close of yesterday, we had a big jump in the candlestick chart here from somebody buying in a lot. Look at that volume. That is crazy. I guess somebody saw the earnings report and said, well, this might be a long-term. But let's continue. The other company that I listened to an earnings call on was Duke Energy, and this earnings call was phenomenal. Listening to the CEO and the CFO and everybody on this call discuss all the financial information and the moves that they make. One main thing to note, they have the lowest cost or the lowest rates. They've had the lowest rates for about 120 years. And even though costs are high and it seems like they keep raising rates, there's a reason behind all of that and the build out and the reliability. One thing I can say, we haven't had any outages as bad as other places within the US or outside the US in general. So I'm just grateful and thankful. But a lot of great information put out in their earnings call as far as their capital expenditure, which is basically the money they spend to build infrastructure, to invest in a business, and to grow it to the capacity that's necessary to provide. Their CapEx is very high, which in this case, this is an energy company having a very high CapEx over expectations. This undergirds the AI boom in the tech sector. You know, Amazon, Google, Meta, their CapExes have been looked at as dramatic, as how is this number acceptable because it's so far above expectations. But with energy companies signifying through their capex numbers that this build out is real, that just undergirds the whole boom portion of the industry. Major contracts that they signed, Amazon, Microsoft, BMW are a few of the major companies that they signed data center contracts with, and they actually have those under construction, and they should be in operation by late 2027, which is solid. One thing to note about those, they are usually formed into ESAs, and some people think, or in some cases, people have backed out of ESAs, but these plants, these data centers are currently under construction. They have shovels in the ground. They're building them out right now. So they're on track to be built and operating by 2027. And one thing they wanted to focus on with that is customer affordability. So one of the biggest things when it comes to this AI boom and the need for power is how these hyperscalers and these big companies and corporations' power is going to affect the cost of general customers. And this is Duke Energy's focus and has been their focus for the long run and since their beginning is affordability. So with these build outs, they are tariffing these companies. They have fees that go along with this. They have minimum requirements of billing that go with this whole process of building these data centers so that the cost does not transfer to us customers, even though their rates are sometimes still going up. But those rates, like I noted in my discussion of EQT, I don't know if you've seen that video, but those rates are necessary for the build out and the redevelopment and the restructuring of our grid so that it is reliable, so that it is stable, so that we don't have outages like they do in some places in Africa, if you know that rap. Other than that, the build out for AI is aimed to be built up and ramping up around 2028. So we got about a 3-year runway. So get invested in this tech, get invested in this energy. Around that time, we may be looking to rotate out of this industry because it may be decreasing because of higher tech that makes things more efficient that require less energy. So let's stay tuned, but we got 3 years of a run. This is just the beginning of this build out. Other major points, they are they did know that they did handle the most recent snowstorm, Snowmageddon of 2026 very well. They had about 200,000 outages during that period of time, and they were able to get 95% of those restored to power within 24 hours, which was phenomenal. And they did announce a new application for a nuclear facility in Bellows Creek, North Carolina. So Duke Energy is doing solid. Now, there were two other companies. Let's discuss their chart very shortly. Solid chart as far as the monthly. Daily time frame is recovering from the pandemic and the 2020s and the Biden inflation and the Biden economics. So we're looking solid. Great for the daily time frame. We're good. So there were two other companies that I got to participate in their conferences yesterday. One was Kodiak AI, which is an autonomous trucking company. And I gained interest in this company a few weeks ago when I seen an ad on Torque Robotics on Facebook. So this is one of the stocks that I added. And funny thing is, I believe last week, Kathy Woods, the CEO of ARK Invest, she actually made a major investment in Kodiak AI last week, right after I posted about it. I can say that, but she probably was doing her research and everything too. Everything is circle. But I thought that was interesting. But a few major points from that that I gathered, which was great information. They have been in operation for about 8 years, and it's been about 3 or 4 years since their public IPO, which they had contracts with the U.S. Department of War before them, and they were testing their products, developing their products in that environment. and now they're looking to transfer it more to the road. They do have about 10 trucks on the road operating 24/7 in the Permian Basin in Texas right now, which is a very, very difficult environment to operate in, which gives a little bit of substance to the product that they developed. And it's not just a general truck. So you know how Tesla and other companies who are building into the autonomous industry, they typically build the entire car instead of just possibly attaching the components necessary for the car to operate autonomously to the vehicle. Well, this is what Kodiak AI has done to satisfy customers, because different customers like different types of trucks for different jobs. So instead of having to buy an entire vehicle, all they have to do is attach the equipment to the truck of their choice, and it will operate the way that is necessary. But they have 10 operating right now in late 2026, which is what I'm going to be watching for. They are looking to expand it to general customer roads. They're mainly operating in an industrial sector right now, which is cool and it's good, especially in the Permian Basin, where industry as far as oil, gas, a lot of industrial corporate giants are there. That's going to be a big market. And one thing that the CEO noted when it came to Kodiak and the build out of their company, he didn't want to do a lot of marketing or a lot of press up front, because he wanted to first build out the infrastructure, build his connections, and build a solid foundation for the company before moving forward and pressing the gas on marketing and press coverage and putting the product out there. One major connection that they made just this year, at the beginning of this year, was with Bosch, and I believe that gives them a little bit more of a global exposure. So they really focus on long haulers, but their components can be attached to regular everyday trucks or whatever truck is necessary in the industry that a company is in. Other than that, they like to use redundant technology, unlike Elon Musk, who is only, when it comes to Tesla, they only use cameras. So the redundancy brings safety and efficiency. So when it comes to commercial customers, which is going to be their focus going forward, this is not too heavy on costs, because they're going to be buying in bulk when it comes to these products, which is solid. Last but not least, let's talk about banking and the financing industry, and more specifically, Truist Finance. They held a conference yesterday with he's over the consumer department. He's the chief consumer department something. I may post his picture on this video, but his name is Dante Wilson, and he went into detail about Truist and the company and their direction. And this conference was very informational. But one thing that I learned about Truist, which was a good sign, is that they're very customer centric, and their build out as far as expanding their reach and expanding locations is more focused on building relationships and financial planning rather than just transactions and increasing deposits for the bank, which is typically the focus when it comes to, is your bank growing or not? They want relationships, because with that, he notes that building that solid relationship and then building a financial plan with the person, making that the focus as far as goals, may lead them to eventually be in the position to start a business, which leads to more business for the banking industry of Truist. So that is solid. One other thing that he noted was that they have been using AI for years, which is huge in today's world. We know this. But one thing that was phenomenal about mentioning AI was the fact that he said that quantum would make their AI use even more efficient, and it would increase exponentially the money and the revenue that they're making off the current AI. So they have shown that the AI that they're utilizing in their company, with their workers, with their employees, and in their working environment and for their customers, is producing revenue. It is showing proof. The last two things that he noted, or that he was asked about, was the K-shaped economy and signs of maybe a warning to the declining health of the economy or the consumer. And as far as the K-shaped economy, what he noted in this conference was the fact that when it comes to the upper part of the K, which is the wealthy, and the lower part of the K, which is middle to lower class people, that there is an increase in their ability to spend equally, and it's increasing at the same rate. So instead of it just the lower part of the K going lower and the upper part of the K going higher, all that's happening is they're both being moved gradually up together, and their spin is showing that. So that's a cool thing to know. Oh, and one other thing he noted about it is the fact that their words aren't matching their behavior. So on the surveys that a lot of these news agencies put out about consumers and this and that, they're saying one thing. They're saying the economy's bad. They're saying this, but what's showing on the books, what's showing in transactions is that they're spending. So doing your research, and your due diligence will tell you more about the economy, about the consumer, about a company, about the industry and where the market is going, more than the news is going to emotionally drag you out. As far as signs of warning that they watch daily when it comes to consumer health and economic health, as far as the general economy, they watch for if their deposits start going down. That would be a sign that the economy is going in a different direction, or the health of the consumer is decreasing at an accelerating rate. If requests for minimum payments goes up, that would be a sign. If credit utilization go up, so if more customers are using credit rather than the income that they have coming into their accounts, and that would be a sign. And if their FICO score goes down. But what he states is that none of this is showing that the economy is strong, that the consumer is strong, and everything is lined up for the setup, this big AI boom. But other than that, guys, I believe that is all. I do have another earnings, probably a few earnings today that I'm going to cover, and I will present that information tomorrow morning. But it's one of the penny stocks that I picked up last year, which is phenomenal. Can't wait to see how that comes to this, because the price dropped on that stock, and I know that there was no reason for it to drop as far as the fundamentals and how they're building out. If you watched one of my previous videos, I talked about this stock earlier, but I don't want to put it out there because I think that Bloomberg and somebody's watching me. But other than that, guys, don't forget to stock the future. In 5 years, you want to be able to tell your boss, hey, I think it's time for you to go. I'm going to fire you, and go do what you want. Build your dream, pursue and build a business or career that you want to, instead of being controlled by your finances. Invest your money. Be wise. Stock the future. I will see y'all tomorrow morning. Have a great day. Peace.